Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Halloween. It's Tuesday, October 31st. I hope you guys have some great safe plans for tonight, and hopefully the kids will enjoy themselves as we had when we were their age. Hey, we got a few items to go over today. We will start off with economic news, and the first on the docket is the Employment Cost Index. So back in previous quarter, we had a 0.5%. For the third quarter, the initial one comes in at 0.7%, and it came in right expectations. And a lot of that is due to costs going up due to wages. So we're starting to get a slight improvement in there. Again, wages aren't going up. It's not. It's what's kind of really dragging the inflation down, but it's starting to trend in a more of a positive manner here, and hopefully help out in not only inflation but obviously people making more money as well. We also got Case-Shiller Home Price Index. This kind of gauges the 20 largest markets in the U.S. as their appreciation levels, and we had a 5.8 back in uh, July here, and it went up to 5.9%. So again, we still got a pretty strong housing market, as you know, the media is kind of reporting a lot of negativities out there, but again, it's just kind of being held back. We would have a lot more sales if we had more listings, but because we have such a low inventory, it's what's really keeping some of these numbers down a little bit, and it's not really a normal market in the sense that we have extremely low inventory level, lower than the average. So again, but home prices are still showing strong. We're still getting good, reasonable appreciation levels here, and that's a good sign. Uh, we also got Chicago PMI for the month of October. So September we had 65.2, and it went up to 66.2, and so basically one. And this is manufacturing in the Chicago region. So overall, manufacturing we've been seeing, at least for the month of October, has been very good. We saw the Northeast and Empire State Index as well as the Philly Fed. Great numbers out of there. Chicago's had decent numbers here. So real positive. Things are looking real positive right now. And manufacturing obviously is very important to our economy and get things moving along, especially with the GDP numbers. Last but not least, we got consumer confidence. So September we had 119.8, and the forecast for October is 121.3, and it came in a nice 125.9. This is the highest confidence level we've had since the year 2000. So this is obviously a very good sign that people are feeling pretty good. The best we've seen since before the credit crisis happened, or even in this case, right around the dot-com crash, even if you go to 2000. So good overall numbers here. And as you'll see here, oops, excuse me. As you'll see here, the stock market's up. It's taking its cue from those. We had some great numbers here. Earnings reports came out with good numbers in earnings so far this morning. We do got some big ones coming in after hours as well as tomorrow with your Apple, Facebook, and stuff like that coming out later on. Tesla, some of those guys will be releasing theirs over the next day or two. So those could, of course, move markets as they do play a big part. Last but not least, we got the FOMC begin their first two-day meeting. We don't expect anything going on today, but tomorrow they'll give their announcement. Typically about 11:15 Pacific Standard Time, we'll get their announcement. And it takes a while for usually a day to kind of sift through the notes and everything and the statement and try to decipher as to any surprises, the dot plot maps and stuff like that, and kind of gauge as to where the next thing is. So we may see some numbers tomorrow could create a lot of volatility. The next day, sometimes if it overreacts in one way, it could counter the next day on basically on Thursday. So again, over these next couple of days, we could see some volatility. So be a little cautious moving forward if you are out there with floating interest rates or not. As a result. So let's go take a look and see where we stand in terms of interest rates. We had a nice day yesterday, closed up about 25 basis points. Just after this, we closed above the 200-day moving average, which is fantastic. We needed that. And right now we are touching this first level resistance. We test it, we got pulled back. Today we're testing it again as you get in the star effect. Hopefully we can, if we can get above that, would be real helpful for us. Again, this could be short-lived if we don't start this trend upwards and break above this as well, because this could be basically just kind of kissing this level and then push us back down as we were before. All right, so be a little cautious again. We're not out of the woods, so to speak, yet, but we do. Rates are about the same as where we left off yesterday. Those who didn't price for better, we didn't really get better pricing. We started the day off actually up a bit, excuse me, up. We started up quite a bit better anyways. So really pricing is about the same as where we left off yesterday. Okay, so let's take a look here at the Treasury. Treasury, closed down about 230. We were down actually. We started the day off even further, and now we're up. So we're up at about 2.37% right now. We finished the day off at 2.36 yesterday, and started the morning up at that level as well, and worked our way up. So it's up about 1 point right now. Again, that pretty much wraps everything up. Rates are about the same as what we left off yesterday. I hope you guys have a wonderful Halloween. Be safe. But if you guys want to get more data on the market throughout the day, just come over to Twitter. You'll find me. I'll post updates throughout the day at Mike Bjork on my channel, Mike Bjork. And hope to see you guys tomorrow. You guys have a wonderful day. Again, be safe. And thanks so much for watching. And we'll see you guys tomorrow. Bye bye.